Afternoon and good evening. I am Emma Joyce, Head of Community at Global Digital Finance, and it's my pleasure to welcome you to this Global Leaders Town Hall in partnership with the Global Blockchain Business Council, with special guest Richard Byworth, CEO and Chief Executive Officer of Diginex. Lawrence Wintermeyer, Executive Co-Chair of GDF and GBBC UK Regional Ambassador, will host this town hall and discuss with Richard the COVID-19 crisis, the story behind Diginex, the most recent launch of Equos, the new digital exchange, and its upcoming US NASDAQ listing, and the future of the digital asset sector. Richard Byworth is the Chief Executive Officer of Diginex and has over 20 years professional career across finance, startups, investment, and fintech. Diginex is a global digital asset full-service financial firm focused on bringing digital assets to the mainstream and broad institutional adoption. Diginex has a boutique investment bank, Diginex Capital, a virtual currency exchange, Equos.io, a trading system, Diginex Access, a custodian, DigiVault, and asset manager, Bletchley Park Asset Management. Previously Managing Director at Nomura, the Japanese investment bank, Richard was running derivatives and equity-linked product sales for Asia-Pacific products globally. The youngest Managing Director in the firm's history, Richard led the build of the #1 franchise for convertible bonds in Asia from 2005. In both 2008 and 2009, he was the firm's largest producing salesperson across Nomura's global wholesale investment banking franchise. Richard led the syndication and distribution of some of Asia's largest convertible bond deals in the last 15 years, including China Unicom and SoftBank. In business, Richard has founded several companies and is an active investor, having started his first trading company in 1990. He is a board member of Bletchley Park Asset Management, Jersey, Diginex, and sits on the advisory board to privatemarket.io, a private equity fund marketplace. Richard is Hong Kong Regional Ambassador for the Global Blockchain Business Council and has spoken extensively around the merits of blockchain for business and finance at WEF and the United Nations. Richard holds a BA in French with Management from University of London, Royal Holloway College and Business School at ESC Montpellier, and speaks French fluently. I hope you enjoyed today's session, and I'd now like to welcome Lawrence and Richard.
Well, thank you very much, Emma, and Richard Byworth. So what a pleasure to see you again, and welcome to the Global Town Hall Leader Series.
Thank you, Lawrence. Pleasure to be here. Thank you, Emma, for the introduction.
What a background. I don't know where we're going to get stuck in today, and it's a good thing we had a few minutes to speak before the call was up, because it was a year ago. I was sitting in your office in Hong Kong, listening to all of Diginex's great plans, and that seems a different era. It was 6-7 months ago. We were at the World Economic Forum in Davos, supporting the GBBC. I call GBBC the ground zero of blockchain at Davos. And you were attending a GDF event with the Digital Economist, catching up, and that was just at the time, I think, that the Mobile World Congress had announced that, as a result of COVID, it was going to cancel for the year. And so January actually seems like a different time zone. Yeah. But here we are today with a pretty exciting launch and lots of news to talk to folks about.
Yeah, absolutely. I mean, as you say, Davos seems like many years ago now, and certainly a different era. I think, as we were discussing, it was that exact moment that the world suddenly started to turn. It was almost like that was the inflection point, and yeah, it's been a phenomenal change.
Well, it was, and not to dwell too much on that, but it is one of those moments that you remember where you were, and I think it was on a Thursday, which on the promenade is always a pretty big day at Davos, or what I call off-piste Davos anyway. But indeed, but now let's pick up this story, Richard. I think that, most of the GBBC and GDF listeners know you and know Diginex. Your contribution to both communities is exemplar. The contribution Diginex makes to GDF, particularly with Malcolm leading our advisory council, chairing that, the whole advocacy work we've done around AML, leading FATF in the R16, setting up the joint working group, outstanding stuff. But I get a sense that a lot of people outside of the GBBC, GDF community might not know Diginex as well. And again, I just want to go through some of them as roll call. We want to pick up and start with the launch of Equals, but you've got a custodian, which is DigiVault, a security advisory firm, Diginex Capital, and of course the digital asset management firm, Bletchley Park, which is getting a bit closer to your own background and pedigree. So can you just walk us through the Diginex story, a bit of the backstory, and how Diginex came into being with all of these businesses and where we are today, actually, with the just recently launched Equals a couple of weeks ago?
Yeah, so look, we actually started this business as a cryptocurrency mining company. I was one of the founding investors in that business, and that was in June 2017 that the company was founded. And it was very interesting. I was actually still in banking at that point in time. I was doing quite a lot of venture investing, and Diginex was a key investment for me. I was on my way out of banking, and I was joining a venture capital firm, actually. And Miles Pelham, the original founder of Diginex, came to me and said, look, I think there's something very serious that we can do here in the financial services space. I said, okay, I'm not sure how that relates to mining or what it is that you're doing currently at Diginex. He was like, no. This is a whole different thing. And this is really the disruption of capital markets and the world we grew up in. And so he really mapped out this vision for how blockchain technology would eventually completely disrupt the capital markets businesses that we were so used to and had spent our entire careers building products around. And so we set about, this was very late 2017, we set about designing what we call today the sort of the ecosystem of Diginex. And that was always with an exchange at the center. And at that point in time, it was very much to sort of leverage the fact that we were going to end up with digital securities getting listed into that marketplace. And obviously, as the business progressed and the build progressed, you're always focused on what is a revenue opportunity now, as well as what's the long-term vision. And so what we pivoted to early was making sure that we had built an exchange that was able to deal with virtual currencies, and actually an exchange which focused on our backgrounds of derivative products. And we really looked at the industry and like, there are some really interesting innovations happening around the derivative space, but there's also huge gaps in terms of what institutional investors will need when they want to start to trade derivative products. So that was Equos, and really formed the center of the design. And then really, actually, it was funny, Equos was the last piece of the whole puzzle that we built. We started with that foundational piece of the custodian. Many institutional investors that we spoke to, they had a big concern around custody of this asset class, rightly. This is the foundational piece. This is the piece that really they need to have their heads around to be able to go to investment committee eventually, or risk committee, and say, we're comfortable with this product set. This is how we're dealing with the fundamental issue, i.e. custody. So we spent a lot of time trying to work out how we were going to build a very differentiated custodian for the industry. And we actually interviewed a number of teams, worked with a few people that we knew from traditional finance, and definitely made a number of false starts in that arena. And then we hired a team led by someone that we actually knew through traditional finance, but he'd never been in traditional finance. An ex-commando with the Royal Marines. He'd done quite a significant amount of time with the Ministry of Defense on security solutions. And we said, look, how about you help us build this custody product? And so he got very excited about it. He ended up hiring a whole team and architected what is now one of the leading custodians in the industry, We recently got certification from Crest around cybersecurity. We have also Cyber Essentials Plus accreditation, which is a Ministry of Defense designed accreditation for cybersecurity for technology organizations. We are the only firm in the industry that has that accreditation. So yeah, look, we wanted to build something absolutely market leading and bulletproof, and Rob and the team have really excelled and exceeded expectations on that front.
No.
Then came sorry, Lawrence.
No, go ahead, please, Richard, carry on.
So then came asset management, and asset management for me was always something that I wanted to be focused on. As an investor, I saw real limitations in terms of what was offered currently. And many of the funds, you know, they posted great performance, but you couldn't really trust what was necessarily happening behind the scenes. And I had chatted with a friend of mine from the fund-of-fund industry, and he ran all the fund-of-funds for Lombard Odier Asset Management in Geneva. And I started to explain the limitations of the industry and how potentially a fund-of-funds could help the industry progress by effectively providing a standard around operational due diligence, around investment due diligence. And he got so excited about it, he actually quit Lombard Odier and came and joined us. And he is the portfolio manager today for our first fund, which is the fund of funds that operates under Bletchley Park Asset Management, our Hong Kong regulated asset manager. We also signed a fairly landmark deal with one of the world's largest trading technology providers at the end of 2018. And again, we were always asking ourselves, how do we get into the institutions early? How do we make sure that the institutions can get into this product? Because obviously, once you've got the custodian, you need to be able to trade the asset. And so while there are all these exchanges out there, a lot of problems come with actually managing the trading, the portfolio management. And so we thought about this trading system that we were building for ourselves, which we call Diginex Access. It then progressed into a effective multi-venue trading platform that plugs directly into Front Arena, which is FIS's portfolio management system. So FIS is, as I'm sure you and all your listeners know, the largest trading technology firm in the world. And when we did that deal, we did a 10-year exclusive deal. So means we're the only crypto trading platform that they'll be working with. But it didn't lead to exclusivity on our side. And so we actually recently engaged with Itiviti, which is another very large trading technology platform that has its own PMS, T-Bricks. So we're in the process of integrating to that as well. But what that means is that two of those platforms, their crypto trading platform is Diginex Access. And so as well as Equos, that plugs into all the other big exchanges across the whole ecosystem and the industry. And I know I've been going on for a while. There's quite a lot of businesses incorporated into the Diginex ecosystem. But another business that we started fairly early was just, we saw everything that was going on in the ICO space. We recognized that the technology was very disruptive, and we wanted to be able to help people provide a credible way to actually launch tokens. And that came back to investment banking. At the end of the day, when you structure and originate a securitization transaction, it's investment banking. And when you want to distribute it, it's that markets part of the business, which also sits in the investment bank. So obviously separated by Chinese walls, but having that construct and coming from that construct, we're like, okay, this is really just the same thing, but just lives on this new technology. So again, when we thought about what all of that needed, it needs to have a viable custodian that can custody digital securities, and it needs a marketplace. So obviously that's the next phase of the Diginex growth, is when we're able to regulate Equos as a securities marketplace. That's when everything moves into the next phase. And we imagine that this will be one of the key starting points for real disruption of capital markets and the way that we issue securities today.
It really is an amazing story. And again, I'm always, technologically secular in this market, but I love the playbook. So I think, for any of you listening out there, the actual sequence of your playbook, and similar to you, I'm not from the blockchain or the DeFi market. I have a cap markets or an institutional orientation. And, the focus on building the playbook and focusing on custody, which I always call the Gordian knot of digital assets, but particularly to make the pool safe for professional or institutional investors, building out onto the infrastructure, into the infrastructure market piece in the exchange is just fantastic. That you've got an asset management business on top of it is, it's very impressive stuff, Richard. So maybe we can come back again to what's going on in EQOS in the US in a minute, and just divert back to where we were in January, and what we probably, many of us didn't see coming, but speaking to you at the time, and again with a risk management background, I think we were part of a community on the promenade in Davos thinking, okay, there's some pretty bad mojo coming here. And so how through all of this journey, particularly in the last 4 or 5 months, has the COVID-19 situation affected what you've been doing? And what are some of the things that you're seeing on the ground? Because you're operating, you're operating virtually in every time zone. You're certainly covering Asia to the US. So give us a view of where you've seen the sort of problems and where the opportunities may have popped up, and your general view on the ground of how COVID has impacted things.
Sure. I guess I'll start from actually, one of the key pieces of news. We're about to be listed on NASDAQ. And this is obviously a monumental moment for the industry. But I think, when you and I were chatting in Davos in January, it was like, we're about to be listed in March. And then pandemic strikes, global pandemic, markets go absolutely to hell. And
certainly did on the 8th of March.
Well, yeah. And that was very close to our shareholder vote date. No. So we said, look, it's probably not the best moment to list on NASDAQ. Our listing on NASDAQ was never about raising capital. It was actually always about, coming back to sort of the earlier part of the conversation, is about bringing credibility to the industry. And, having finally a NASDAQ listed company that incorporates a virtual currency exchange gives people a level of trust and security and transparency that they don't have elsewhere in the industry. And I think really it's a starting moment. It's a starting gun for many crypto companies. And I've been approached by many of the ones that we know well and are close to suggest that may be a route that they choose to follow as well in the future. But obviously, COVID, its immediate impact was in delaying our listing. I think that really turned out to be a blessing in disguise. It means that we've been able to now launch every element of the platform. We go to NASDAQ in a much more mature, fully developed, revenue generating in every aspect of the platform, which I think, investors will understand a lot better. So I think the timing is actually quite perfect. We're going to market in a SPAC as well, and SPACs are obviously the talk of the town. And so I think, as I say, COVID has been a bit of a blessing in disguise for us. Obviously, it's also come with significant challenges. And you ask about, the issues on the ground. Here in Hong Kong, we have managed to continue going into the office, and I'm actually in the office still now. And the office is full every day, which is great, which means the team can get together and really be productive, super productive, because people don't have social lives anymore. And it's obviously quite different in some of the other countries that we do operate in. In the UK, as you and I discussed earlier, the limitations and the restrictions that people have been operating under for some time now is definitely starting to affect the team members. Not being able to get together and have team meetings. I think it's not great. It's a bit of a pain. And we work closely with Singapore. We're obviously in the process of regulating the exchange down in Singapore under the Payment Services Act. And more and more we want to be having people down in Singapore. But there's certainly no bridge between Singapore and Hong Kong at this point in time. I hope that will change soon, because the countries do so much business between them. But we really need to be moving people down there. So that's definitely slowed that element of things down as well. So that's coronavirus has been good and bad for the company.
And one of the things I think has been very important, particularly for cryptocurrencies, is from that first week in March, they looked like everything tanked really in the first week of March, including gold. So everything was highly correlated down, which is pretty typical in an event like that. But through March, it was behaving a bit like safe harbor assets, sort of like gold. And, putting aside the volatility, there's a couple of big things on my radar. I mean, one, the derivatives market, certainly since last year, has grown. More importantly, crypto has certainly survived, not just crypto winter now a couple of years ago, but COVID-19. And it would appear to me through things like the focus on central bank digital currencies, Libra now, coming into its plans to launch, broadly with, some of the sort of G7 stablecoin currencies, that it really has caught the mind of not just the policymakers, the regulators in the industry, that this is, a pretty bona fide asset class or set of asset classes in digital. And so can you just give us your insight? I mean, are you seeing that? And how does CBDCs, I mean, it's great for you to pick up a bit on the derivatives gaps that you were talking about earlier that you saw in the market and what you wanted to come in and fill. But could you give us a view on where you think that, even the CBDC market is going and how important that is for our viewers to pay attention to?
Yeah, I think, and I was interviewed pre-COVID around my view on CBDCs, and I said that I think that 2020 will be the year of CBDCs. I think COVID has only expedited things. So the Fed now obviously have got to a point of, issuing cards broadly to the population so that they can continue with allocations of assistance and substance through these challenging times. But obviously, I think the realization has been that if they were to have had a digital dollar, and everyone had a digital wallet on their phone, they could have been distributing aid a lot more effectively and efficiently.
Absolutely.
And I think that's COVID has definitely expedited many central bank projects. I think even pre-COVID, we'd spoken, to people that were involved in, or even in some cases, central banks themselves that suggested, I think it was like 35 central banks already were in the process of some sort of a plan around a central bank digital currency. Obviously, China have been front and center of the lead of this charge. And I think that's definitely, one particular country that has chosen to, be more motivated, let's say, by that activity has been Japan. Obviously, having worked in Japan and with a Japanese bank for many years, I have a lot of connections into the Japanese finance community. And there is no question that the Bank of Japan wants to be issuing a central bank digital currency hot on the heels of a digital yuan. So there's definitely almost a competitive element now between governments and central banks, trying to make sure that they're not disadvantaged by having been a bit too slow in the uptake. But I think, as you rightly point out, this is only good for the industry because it educates people further. The idea of having to have a digital wallet on your phone for Americans to be able to receive aid. It just opens the minds to things like Bitcoin, things like the transfer of securities via a digital network. Why do you have to spend 2 weeks switching a 401k with reams of paperwork when you can actually just move securities in such an easy fashion? So I think this will just expedite overall adoption of digital. It's an exciting moment to always try and take a good thing out of bad.
It is, and again, let's pick up the derivatives market on the numbers we were quoting over the past few months. The derivatives market looks as if it's probably about 60% of the spot market. I'm always having a bit of a tussle with regulators saying, well, actually, look, even in the spot market, a lot of transactions look like, professional investors or qualified or eligible investors, depending on what part of the world you're in. But the derivatives market, which is both you and I have spent quite a bit of time for, we look at as the market anyway. The products out in crypto and the derivatives market have come out of CYE and NYSE instruments. And you caught me earlier when you were saying, with your own background, you really, you saw some gaps, you saw some space there. Can you share some of your thinking about what you guys are thinking with that Diginex and Equals about the derivative space?
Sure. Yeah, we've mapped it out in our roadmap, but I think to your point, we actually quote a fuller number. We actually in derivatives we include perpetual products that are traded on a lot of the virtual currency exchanges. So actually, when you include that, the number actually is significantly larger than what we see in the spot market.
Sure.
So we're actually around, by our estimates, and again, it's hard to get full transparency on numbers, but we estimate it to be about 3 to 4 times the spot market.
Yeah.
So actually, when you include perpetuals, and I know you're just talking obviously about, particularly options and in places like CME and backed, but when you take that full picture, you're already a $20 billion market of trading. So while that's already starting to sound quite large, the potential for the growth of derivatives is significant. So actually, a lot of what we learned from researching the fund of funds was the challenges that many of the players in the fund space, the asset management space, were having around derivatives. Yeah. We need derivatives. We need to be able to start trading these products properly. But they were telling us stories about how they're running a long position, on a spot basis, short a derivative product, and they get stopped out the short derivative product, even though they're delta neutral, because they're being looked at on a different basis around collateral. So you've got this management of positions all the time where you can never actually be flat because you're having to run some element of delta. So it made them really frustrated. And so just basic portfolio margining within an ecosystem obviously allows you to move away from those issues. So that was one, probably the key. The other thing is settlement. So, you take the CME future on Bitcoin at the moment, and, it's a cash settled future, and it settles against a price that CME themselves publish, XBT. And XBT is actually just a snapshot of 5 different crypto exchanges because CME doesn't trade spot. So you've got this weird dynamic where institutional traders are trying to settle potentially $1 billion of futures contracts on a non-tradable price.
Yeah.
It really limits what they're going to do. In traditional finance, many traders are just there for a few basis points. If they've got the amount of slippage risk that you're going to have with a non-tradable price, they can't even do the trade they're trying to do. So,
yeah. Well, Bloomberg concurs with your 2 to 3 times, bigger than the spot market numbers on perpetuals. And then I'm always bringing up the derivative market because it's bigger than almost all of the other markets, or pretty much every single market you can stick into it in the world. So I think your point on derivatives traders and you know, where the margins are is, you know, a great one for listeners to take home. And I go watch this space with what you guys do in the perpetual space. I just want to jump to private market securitization, because you mentioned fund of funds, and then I know this is something we talked about at some time, but you know, in the early days of fintech, medtech, and clean tech, you know, having been particularly focused on liquid markets and managed futures, I was looking at all of this venture capital stuff, and you know, started thinking of Mike Milken without the debt, and saying, you know, how do I get a risk-adjusted high yield product out of all of these private market securities? And that's been where the growth is. Clearly, there's a lot of excitement there, but you know, there's a ton of risk there. And you know, I would say to investors, well, what are you going to do? You need to take an exposure of 80 to 150 techs. So you can't just jump into, you know, one fund or one or two, that sort of thing. And so, have you looked at that, and how important do you think is that whole digitization of private market security to your playbook?
No, Lawrence, you've absolutely hit the nail on the head. Like, that's the issue, right? If you only have $100,000 that you want to allocate to private, you can't even play.
Going to do it.
You can't play, right? So, you know, one of the biggest factors around the way that digital securities will change the way people invest means that it suddenly becomes more accessible, because you can create fractional ownership to a degree that it's not cost inhibitive as it is currently in the way that we run things, because you can just split a security. It doesn't matter, right? Yeah. So there's no additional cost. So suddenly when you're doing a securitization or product, you may say, normally you'd say, well, the minimum investment is going to be $100,000 or $1 million. I mean, I think any Cayman structure is a minimum of $100,000, right? So that actually excludes a lot of people, even people that are quite wealthy, because like you say, you need to have a portfolio of 50 of these investments to make sure that you've actually got the viable diversification, that you've got that, you know, sort of outperformance portfolio that's gonna actually pay you, rather than just trying to choose the one. And so I think that the cost advantages of taking all of this digital really allows you to go much smaller. And you know, I've been talking about this since the beginning of Diginex. This is super exciting for people to start to really take control of their portfolios. Right now, you want to invest in Latin American property. You're a standard investor from Asia. You don't have a huge amount of capital. What choice do you have? You're going to have the JP Morgan or JF LATAM property fund. You might have a Fidelity equivalent, and that's about it. And you're getting charged 5% entry fee, a 1.5% management fee, and the portfolio manager is underperforming the index by about 3% or 5%. This technology allows us, again, going fractional, going smaller in this allocation process, it allows everyone to become their own real allocator of capital. I can go and invest in beachfront property in Rio de Janeiro, in Ipanema Beach, because I can participate in an STO that, you know, I can participate for $25 if I want. And suddenly I can create very surgically specific portfolios which, you know, align with my view as an individual investor. And it just opens the door of, you know, freedom for investing. So that's sort of the ideological view of the future. Now, we obviously have a few steps to get there. We need regulated platforms where these things can trade. We need regulated custodians. We need those custodians to be broadly global, to accommodate where assets will need to sit. But, you know, more and more, we're going to start to see this play out. And I think that working with regulators to sort of understand how you're going to see this progress is a big part of all of this. A lot of people have been very critical of the slow progress of the digitization of securities, the security tokens. You know, I often hear people say, well, yeah, that was a failure, wasn't it? It didn't take off. I'm like, I'm like, come on, you're talking about disruption of financial markets, very heavy regulatory scrutiny, and you're expecting this to take off in 1 to 2 years? Well, I don't know if you were at the panel I did on this exact subject in Davos, when we talked about capital markets, we talked about security tokens and the future of it. And even at that panel with, some really thoughtful leaders in the industry, we had an audience of, I would say, 50 institutional investors who were there to really understand how we're going to start to see digital securities progress. And within moments of the panel starting, you've got one of the representatives just talking about cross-chain swaps and protocol this and this. And I'm like, what are you doing? This is why this will progress slower, is because you're just going off into the deep end, and you immediately lose 90% of the people you're talking to. Because you imagine those CIOs that were sat in that room trying to go to their risk committee or their investment committee and say, I'd like to invest in a digital security. First question is not going to be what cross-chain swap are you using. It's going to be what is a digital security, right? What is a blockchain?
I couldn't agree with you more. And I think, in the technology space, and particularly in the blockchain space, which is why, one of my many jobs in life is to co-chair a not-for-profit driving standards. We're trying to get the narrative right. And I couldn't agree with you more, although when we get on to the next question, we'll need to address what a SPAC is. So every discipline comes with its own, nomenclature. But I think just to close out this point on private markets, I just love the story, and I love the narrative, and I know there's there are so many junctures, there's so many things that you and I connect with and like to discuss. But I think the importance of this one, given the decline of public listings and broadly the growth of private equity, a number of which are private equity or public companies anyway, which is enough to get your head around. But this point you're raising about transparency and access, and I just think that people talk about secondary liquidity, and I'm like, well, you need liquidity full stop. It's actually a lot about price discovery. So whether it's your asset in Ipanema, which is a great place. I had my honeymoon there, and I absolutely loved it. I would definitely invest in a property there. But whether it's a traditional security or a traditional asset, it seems as that the infrastructure and then a lot of the processes that you and I would want to deploy for professional or institutional investors, we're trying to build, because you just need to, in a way, make it look like something that they can invest in. And it has to have, the process and the mechanism so that they can allocate to it. And I kind of hate to oversimplify it. It isn't that, simple, obviously. We've got a whole industry and regulators fuss with it. But, a lot of these things actually work already. A lot of these things work in the derivatives market. It's just a question of getting the technology right, really, isn't it? And almost matching up that buy-sell side.
Yeah, no, absolutely. I think that this is the point, is like when you need to make the end buyer. It's not just about making sure that you've created a viable digital security. You need to educate that end buyer. And so, the way that we've addressed this has really been around making sure that you give that CIO that's going to investment committee, you give him that option where we actually deliver securities in paper form, where you can choose at any point in the future, in the life of the security, to switch it to digital. So at that point in time, you come to us and you say, okay, look, I think we can probably handle this now in our back office systems. Let's switch it to a digital security, whichever protocol that may or may not be on. And then they can use that as experimentation. And actually, the feedback that we get from investors around that is very, very positive.
Well, that's really cool. But in this case, you're actually starting as a 100% natively digital dematerialized security. It's just you're giving people the option, if they do want the paper for their processes and controls, to actually have it. So I think that's cool. That's one for everyone to pay attention to. Let's get on the final leg and move on to EQOS. So I know you've mentioned it, and we've been speaking about this for some time. So congratulations on the launch. But you're going to be publicly listed in the US in a couple of days, I gather. And the listing vehicle you've used is something called a SPAC. So unless you listen to Bill Ackman in the US, or you're really focused on what's going on in the US market, I'm not sure all of our listeners would appreciate what that is. So can you tell us about the NASDAQ listing, what a SPAC is, and again, a bit of the backstory about how that came about and why you've chosen to go down that route?
Sure. So I'll explain how we ended up here and then what a SPAC is. So we had always been very heavily of the opinion since the very early days that we needed to be listed. If we're going to have that, as I say, that level of credibility that sort of just raises the industry. We were always battling against issues around ICOs and just credibility issues for the industry. And so we felt it was really important to make sure that we were setting a new standard and helping the industry rise up to that standard and that standard of transparency. And so listing for us was always on the roadmap. We'd been talking in Japan with companies like Nomura, Mizuho, and what eventually transpired was it was probably going to take about 3 years to get to listing. And we actually abandoned the listing idea for some time as we were just building the company. And one of our investors, private equity guy, was like, if you want to get listed, you should do a SPAC. You should do a SPAC and you can go to NASDAQ. I mean, NASDAQ's where you guys should be. That's the exchange for technology and innovation and everything. And so obviously first question is what's a SPAC?
Well, you knew what one was, so that was a bit.
We had no idea. I'd heard of them before because one of my clients was trying to get me to educate them on it. And I was like, I don't know what you're talking about. But a SPAC stands for a special purpose acquisition company. So effectively what it is a manager like Bill Ackman will say, okay, I think that I have enough credibility to go to market, raise capital into a shell, list that shell on NASDAQ, and then use that capital to go and make an acquisition. And that will be the end company that's listed. And yeah, so obviously we learned fairly fast what SPACs were. We interviewed with a number of SPAC managers, and actually we selected the SPAC manager because, I mean, obviously everyone wanted to be the first blockchain company listed on NASDAQ. So we actually got quite a lot of SPACs approaching us. This particular manager was extremely connected in Singapore. He's really been extremely helpful in getting us connected with, very senior leadership within Temasek, within GIC, even within SGX as well. So it's been very accretive to the organization to have that SPAC manager. But the process was actually quite long. Obviously, COVID elongated it further. But I think obviously, the SEC had to make sure that they were comfortable with a company like ours being the first of its nature being listed on NASDAQ. And so, they definitely did a thorough amount of due diligence, as you'd expect. And I think we closed the process all in. Once we started with the SEC, it was a 5-month process. Normally it's three to 4 for a fairly vanilla company. But yeah, it was 5.
That still, sounds like an extraordinarily expedited time, particularly in COVID.
This was obviously pre-COVID that we got that initial SEC approval. It was actually at the shareholder level that we ended up deciding to delay.
Got it.
Yeah, because just the market backdrop was horrific at that particular time.
So putting aside and appreciating the shareholder discussion, you were probably fortunate that you were on the other side of COVID, getting through the SEC due diligence and approval.
Exactly right. Yeah.
Great. And I mean, just give us a sense with what this means to EQOS, and particularly with the NASDAQ listing, what you think it means to, broadly the exchange landscape, the competitive landscape, and the way that the sector is going to view this.
Yeah, look, as we've discussed, this is obviously the first time you're seeing a virtual currency company listed on a North American market, and I think this is extremely important to have that exchange at the heart of the ecosystem. It's the first time that investors can get access to a picks and shovels trade, but I think it's also very important for the industry, as I've said a couple of times, in that it really brings the industry into the forefront, into the light, where suddenly investors from all over the world, every investor generally will look at NASDAQ and has NASDAQ within its mandate. So I think if you're a technology investor, you've probably been likely interested in this sector or paying attention to this sector, this really sort of opens the door to you participating in this industry. And it's, as I said, it's the picks and shovels trade as opposed to the core asset trade.
I love it. And that pretty much brings us to the end of our chat, Richard. I just think that we're going to have to get you back at some point or time and carry on this discussion and keep telling the story of how this progresses. I think we'll all certainly be watching it, but certainly on behalf of GDF and GBBC, congratulations. We're excited for you. The hard work over the past 2 years is now coming to fruition, and then it's probably the beginning of the next leg of the journey, isn't it? But Richard Byworth, CEO of Diginex and Equos, thanks for joining us on the Global Leaders Town Hall series.
Thank you, Lawrence. Thank you, GDF, and thank you, GBBC.
Great, and that just goes for me to close out and say that we will have another Global Town Hall Leaders series coming up next week, and I hope that you join us. Thank you all for listening. Bye-bye.